Good morning, valued viewers. Today, we delve into the intricacies of the global financial landscape as shifts in consumer confidence and the industrial sector take center stage, both in the United States and worldwide. These changes are pivotal, shaping the economic outlook for the coming months. The Conference Board's Consumer Confidence Index in the USA has plummeted to 86, its lowest since 2012, driven by pessimism about future job prospects and rising inflation expectations. Across the globe, China's manufacturing PMIs, both official and Caixin, indicate a slowdown, with the official index falling to 49, suggesting contraction. Even the Eurozone's economic sentiment has dipped more than expected, with the index falling to 93.6 from 95, reflecting uncertainties from trade policies. On the GDP and inflation front, the Eurozone is expected to grow by a modest 0.2% in the first quarter, indicating a slow but steady recovery. However, the United States GDP growth is anticipated to slow significantly, reflecting broader economic challenges. While U.S. PCE inflation is projected to ease slightly to 2.6%, Eurozone inflation remains stable. In the markets, the S&P 500 rose by 0.6%, but a decline is expected due to weak Chinese PMI data, while the Stoxx 600 continues its upward trend. Bond yields have seen a slight decline, with the U.S. 2-year at 3.65% and the 10-year at 4.17%. The dollar strengthened on trade negotiation optimism, while the Swedish krona weakened against the euro. Brent crude has dropped to $63.50 per barrel, reflecting concerns over global demand due to economic slowdowns. On the corporate front, Cohn's first quarter revenue grew by 4%, aligning with expectations, but China's revenue decreased by 14%, affecting overall performance. Hiab's profitability exceeded all forecasts with a 16% operating margin, and Remedy Entertainment's first quarter revenue grew by 24%, driven by development fees. Pihla Jalina's earnings beat expectations, but its public services segment faced revenue pressure. While the economic indicators suggest a mixed outlook, central banks worldwide are likely to maintain accommodative monetary policies to support growth. Trade negotiations, particularly between the U.S. and China, will be in focus, as a resolution could boost market sentiment, but tensions could lead to further declines in confidence. Companies with strong fundamentals and adaptive strategies are likely to weather these challenges better than those heavily reliant on specific markets. As we move forward, keeping an eye on geopolitical developments and market dynamics will be crucial for making informed investment decisions. Stay tuned for further updates on these unfolding events.